Greetings to everyone. I'm Tom Cardamone, President and CEO of Global Financial Integrity, think tank based in Washington that has been focused on addressing the economic and developmental scourge of illicit financial flows since 2006. This was our 10th year conducting the SEN essay contest, and right from the beginning, we've worked with Thomas Academic Stand Against Poverty, the Global Justice program at Yale, and it's been just a wonderful opportunity to get to know people around the globe and see some real innovative thinking in this area, which is always important to seeing progress, is new ideas, fresh ideas, looking at particular sectors, particular problems in specific countries. And that's some of what we've seen in the winners this year. I think in some of the email back and forth, it was mentioned that we had 25 entrants this year, the most ever, the most wide distribution of entrants as far as geography goes, which is terrific. So it was a real fresh approach in many angles, and we hope to replicate that in the years coming forward. So with that very brief introduction, I'd just like to introduce each of the winners in order, first place and then the two second place winners, and then hear from them so they can talk a little bit about their research and their winning essays. So to get underway, I'd like to introduce Bilal Moin, who is our first place winner. He's a research associate at the Leitner Program on Effective Democratic Governance at the Yale Jackson School of Global Affairs, and also a researcher at the Johns Hopkins School of Advanced International Studies. A fourth-year undergraduate where he studies economics, mathematics, and global affairs. His research focus is on the study of complex systems in the social sciences, with a special emphasis on the political economy of development in South Asia. His winning essay was titled Taming the Untamable, Rethinking, Regulating, and Revamping Hawala. It was a terrific piece of work, and I'd like to turn it over to Bilal.
Thank you, Tom, and thank you, everyone, for this sort of opportunity to share some work and discuss what I thought was a very fascinating and sort of persistent issue that seemingly, at least the motivation for the work was it's seemingly misrepresented in a lot of research when it comes to sort of understanding money and illicit flows. And the broad motivation was basically wading through what quite a complex idea, which is Hawala, is, and then how regulations very often designed to stop Hawala, or at least minimize its effectiveness, actually have sort of the contradictory effects where they alienate the very populations that use them and at the same time actually cause a illicit money flow to go even more underground. So the broad motivation for the work is, Hawala is this very unique flow of money and this very unique mechanism that's used sort of globally, particularly in the global South, with sort of patterns emerging in Central Asia, in South Asia, and Africa. But then the concern becomes, particularly in the post-9/11 world, we see a large scaling up of Hawala, where there's approximate numbers of around $100 billion to at least $300 billion of global trade and movement of Hawala money. But the concern becomes, in the post-9/11 world, Hawala gets linked to terrorist activities and terrorist funding, which it certainly has been used for, but and sort of gets mixed up in a lot of the anti-terrorist funding policies, where a very heavy-handed approach against Hawala has often caused Hawala to get even more alienated and actually caused Hawala to go even more underground. And the broad argument I'd have to make is a public policy approach rather than an investigative approach solely should be the solution. And instead, we should consider both the human side of Hawala and at the same time, the larger criminal side that is very often used. So sort of the presentation is broadly as follows. I would like to go over sort of what really Hawala is. It's a bit of a weird, tenuous topic to discuss. What the features of Hawala are, so how can we actually identify Hawala for what it is? And lastly, what the scale, size, and persistence is. Then we'll just quickly discuss the imperative of regulating Hawala. Why is it even important to consider as a case? I'll quickly look at the case of India, which gives us very unique perspective of a country that has both a persistent issue of Hawala, but at the same time, at some point uses very liberal policies and at some point has very heavy-handed policy, and look at how people react to these policies and how the scale of Hawala actually changes underneath them. And then lastly, just briefly discuss what an investigative approach entails, what a public policy approach entails, and finally, what the sort of recommended policy proposal is with regards to something like Hawala. So what is Hawala? Hawala is quite an ancient form of money transfer. I mean, if you go back to the sort of Arabic translation, you learn that Hawala is just a word for payment or debt transfer in some way. And there's sort of parallels in Latin, there's parallels in Hindi for what the term is. And the very mechanism of Hawala actually goes back to very early trade in the Silk Road, to sort of Arab traders with Chinese traders, and even the Chinese have their own term for Hawala, which somehow translates to something like flying money, which sort of goes back to the very cultural and deeply ancient roots that this form of money transfer has. And Hawala broadly comes under the category of something called an alternate remittance system, which is defined as a system that offers financial services, but these traditionally operate outside the conventional financial sector. And here, value and funds move from one geographic location to the other. And they typically tend to be fast, inexpensive, reliable, convenient, and discreet. Where Hawala sort of thrives is the fact that A, there's no real money transfer per se, at least directly, from one actor to the other. Instead, what you have is a series of transactions that are eventually settled. Hawala is also unique in that it's extremely fast, extremely small scale, and extremely autocratic in that it's sort of isolated and exists in these own sub-bubbles and doesn't really need to engage with the global financial network if it doesn't have to. I think the best way to talk about what Hawala really is to basically just look at an example and sort of look at a dynamic of what it entails. So here's sort of a brief example that's been adopted from a bunch of different sources and sort of built out to explain what the dynamics are. So let's take the example of Rajesh, who is an Indian expatriate working in Dubai. And Rajesh has sort of made some savings and wants to send these savings to his family back in Delhi. Now, to use a bank transfer, he would have to first open a bank account, which has some time involvement, some cost, a financial cost, and the issue of documentation. The bank itself will charge an official exchange rate, which tends to be higher than the informal exchange rate. There'll be an extra charge for a courier service if he wants to deliver to some rural parts of the country or some parts that are just inaccessible. And third, because of the legal processes involved and the slow rate of transfer, it might take up to a week. And if there's some urgent considerations under which this money transfer has to happen, this might not be very successful. So what Rajesh does is he approaches a local textile merchant or other form of merchant called Ali, who operates as a Hawaladar, which is the term for a person who deals in Hawala. Keep in mind that Ali's primary occupation is not a Hawaladar. It's very unique that you can be somebody involved in this sort of money transfer, at the same time be involved in other occupations. So Ali is a merchant who also operates as a Hawaladar. And unlike the bank, what Ali does is he charges a very minimum 2% commission, 0% delivery charges, and offers a very lucrative exchange rate. He's just financially a better option for Rajesh. So what Rajesh does is he gives Ali this $1,000, and Ali sends an email or maybe a phone call or a WhatsApp message to an associate in Delhi called Vivek, who is a fellow merchant who does just Hawala on the side. In the email, he basically instructs Vivek about the transaction. He might give Vivek a sort of passcode or some common term that him and Rajesh have agreed upon, and then finally the transaction value of how many rupees Rajesh's family should be given. Rajesh, in the meantime, calls his family separately or maybe sends them a letter and basically gives them this password, this transaction, and the address of Vivek. So the following day, Rajesh's family visits Vivek in his shop, wherever in Delhi it is, presents him with this password, and in exchange, they receive a converted amount in rupees after deducting whatever minimum commission that has been taken. The entire transaction takes barely 24 hours and is very efficient. And I think by this example by itself, we can see sort of what the problems with Hawalas are from a global regulation, a global surveillance perspective. Just because A, if there's really no paper trail, how does one regulate it? B, given that it's so isolated and there's really no interaction with the global financial network, how do we actually locate the effects and measure the effects of what Hawala has upon the world? And third, and more interestingly, given that it's so localized and almost personalized and culturalized, can we actually find replacements for Hawala that give people the same benefits and advantages from a financial, from a time, and from sort of a familial perspective? To sort of buttress this example with something more activities, and they actually interviewed a number of Hawaladars. And there was this example of Bariek, who was a Hawaladar, to give us some statistics about the actual scale and state, and more importantly, the cost of having a Hawala network. So this one small Hawaladar in Northern Virginia was able to cater to around 200 to 300 customers. Most remittances were small amounts, barely $20. It might go up to $400. And these were dispatched monthly to Pakistan, which is where Bari was from. And most reasons for these transactions were in funding and aiding basic housing and basic sustenance. There were occasional larger transactions of around $1,000 to $5,000, but these tended to be in cases for funerals, weddings, and other special occasions. He would charge a 5% commission on average. There was normally 24-hour delivery. And there was some form of password or identification protocol that was always used. And this more or less reflects what a traditional Hawala network looks like. They can be slightly different in different cultural contexts and different settings, but overall, these seem to be quite cost-effective, small-scale, isolated networks that seem to be effective in the fact that they're able to cater to customers very quickly and provide them with a cheap form of moving money around. So what are the sort of unique features of Hawala, right? Why is it even worth talking about? But more importantly, what complicates the network of Hawala for what it is? Firstly, what I find most interesting is sort of Hawala is sort of a conceptualization or is actually a demonstration of sort of the Marxian concept of money as a social relation, wherein you don't really see the exchange or movement of physical cash per se, but instead you see the use and the movement of transactions through social networks and social bubbles within sort of these historic sociocultural groups and environments, right? What's very interesting is there's very often this unequal transfer in the network of Hawala, where you might have Hawaladars just continuously sending money from one part of the country or one part of the world to another. And over time, as these transactions continue, the debts just settle naturally, and you don't even need an actual transaction of cash to occur. It's merely these social transactions that cause money to be moved around. And what's interesting is it also mirrors conventional banking in that transactions are cleared between units to level the books, rather than having these sort of very clear and transmissions of money, as you might see in Venmo or other sort of traditional forms of small scale financial movement, right? Or financial transfers, right? A lot of research looks into this power and this dynamic of the social relation of Hawala, and they look at certain mechanisms through which Hawala actually settle their debts, because sometimes it doesn't happen naturally in terms of exchanges. And what might happen is Hawala might actually avoid, in some cases for financial reasons, for regulatory reasons, the traditional bank transfer routes. So let's say Vivek owes Ali $1,000 after many months of Hawala trade, right? On one hand, he could just send him a bank transfer for $1,000, which is fairly often used, and whatever reason, that might be a reason why people use it. But secondly, there might actually be import-export transactions, where as two merchants might be trading, they might just, for example, offset commission or just send somebody goods for a cheaper price to make up for that Hawala transaction. You can also settle debt through transactions such as gold smuggling, manipulating invoices, tax evasion, dealing in precious gems, wherein Hawala very often becomes part of larger criminal or illicit activities, where the act of transferring money is actually intertwined in other financial dynamics, which complicates the picture of actually understanding the scale, size, and networks of Hawala even more. Secondly, Hawala is sort of unique in that it's built on this network of trust. And while all modern monetary systems do have a level of trust to it, we have governments backing banks, for example, there's some level of insurance or some level of legitimacy that comes out of it. In the case of Hawala, it's purely trust, because if your Hawala runs away with your money, what do you do? What's unique is that, at least from a lot of secondary sources that interviewed Hawaladars and looked at the networks, we find that theft is virtually an alien concept. And this is mostly because these transactions rest on a single line of communication, and there's very often no documentation. And what happens in these cases is that the power of trust is so powerful within the Hawala network that even asking for formal identification might be considered an affront to your customers or the networks that you serve. Where these come from is very interesting. On one hand, you could argue that these are just inherent parts of the system, and Hawala is broadly catering to groups of people, for example, from the same villages or towns who trust each other, and hence trust becomes an inherent part of the dynamic. Another argument, which might be compelling, is the case that actually Hawala operates on social control and reputation mechanisms, wherein the entire business mechanism itself only thrives on the fact that theft does not occur and the fact that there's reliability. The minute a Hawaladar, for example, is stained as someone who's unable to meet his promises or cater to their customers, you very often have these social control mechanisms come into play. There might also be fear of repercussions, given that people know each other intimately, that if there was an actual act of theft, it might actually affect one's family or one's household. somebody actually modeled the econometrics and the sort of theoretical economic modeling of a Hawala from a game theoretic perspective, and basically find that the most optimum strategy to do it is, I quote, honor your obligations and reap the benefits of an efficient value transfer system, deviate and face economic exile. And that very well could also be the motivation. It's just a fear of isolating yourself from a pre-existing Hawala network. But regardless, trust forms a very interesting mechanism here, which makes it, once again, harder to actually regulate, just because even if you are doing illicit business with your Hawaladar, there might be illicit activities occurring, but because you trust your Hawaladar or they trust you, you might not even go to the authorities just because of that network that exists and the fear that might come out or emanate from this social control dynamic that's very much inherent to the Hawala network. Third is the sort of argument that Hawala operates behind closed doors. There's a significant level of discretion and anonymity. This might occur because these are functionally illicit activities, or it might just occur because of the lack of paperwork and the lack of documentation that customers very often have, right? Firstly, as you might have seen in the example, there's a very minimal or non-existent paper trail, maybe except one communication between the Hawaladar in one country and the person who's passing it on the other country. You don't really see a lot of other communications, at least on paper. While the system, however, heavily relies on memory, there's often a misconception in a lot of contemporary policy work about Hawala, where they argue that there's entirely no record of Hawalas and Hawala transactions. But if you actually look at these sort of studies of Hawalas within the countries where they operate specifically, you start to realize that obviously it's inconceivable that these transactions operate entirely on memory, and there do indeed exist transactions and records of these transactions, given their sheer complexity. For example, there's a case of Hundi, which is like a promissory note, which is very often passed on from the customer to the customer's family in a physical form. But there's also sort of encrypted ledgers that Hawaladars use in their own form of shorthand, which is very often used to communicate and maintain their own balances and transactions, right? Regardless, though, there is definitely a very high level of secrecy, and this often relies on the inherent confidentiality of these transactions, just by virtue of the fact that there's no reason to report Hawala transactions just because the transactions occur without the reporting or without the overseeing, because of the network of trust, but also because of the lack of documentation. But because of this complexity involved in either no paper trail or a very complex paper trail, it makes it very hard to actually govern the books and makes them very inaccessible to outsiders, namely actors such as regulators. This is, for example, an example of a Hawaladar's bookkeeping that a piece of study does find. And as you can see, it's highly complex. The numbers really don't mean much. But what's particularly interesting is the fact that coding is used for the actual destinations and customer names. So while they have, for example, words as DK, which could be someone's initials and don't really tell you a lot about the person, compare this to a bank record where you know someone's passport number, their social security number, and every other transaction. This is quite bare bones. There might be a transaction value, there might be an exchange rate, there might be a received amount or a commission amount. But here, for example, even the destination of their money could be encoded, where, for example, acronyms are used to represent certain bank accounts or certain destination countries. Or, for example, there might be cases where you might use a foreign language, in this case, Hindi, or, for example, this notation, according to the this Hawaladar's bookkeeping, might actually represent 52 tolas of gold, which is a unit for weighing gold, which might be paid to a local goldsmith jeweler rather than remitting the money. And because these so many different channels through which Hawala can transmit itself, it once again becomes quite a quagmire to unravel and then, more importantly, to regulate. So what are the challenges of measurement, right? Firstly, the extent of a Hawala's transaction is solely confined by sender's readiness to transport cash and a recipient agent's capability to facilitate the transaction, which hypothetically means that you really don't need any fundamental qualifications, sort of documentation, educational qualifications to actually get into the Hawala trade. And all you need is yourself and maybe a friend, a colleague, or parent in some other part of the world just doing this transaction with you, which makes it really easy to start up, but also really easy to scale up quickly. Secondly, these are highly covert. As I mentioned, there's a lack of oversight by the very virtue of its design. Third, the flexibility of a Hawala transaction scale means that it could be used virtually by anybody for any amount of money. Because quite functionally, as long as there's credit and trust on both sides, you can cater to somebody who's a blue-collar worker operating on very small dollar denominations on a daily basis. But you could also very quickly scale that up to fund large illicit activities just by virtue of the fact that there's still trust and there's still mechanisms on both sides. And you really don't need that amount of credit to pass from one side to the other. It could even be conceivable that one sort of white collar illicit movement of money, for example, let's say a couple of $1,000 or $1 million hypothetically through Hawala network, could be offset by many small blue collar transactions over many years. And even then you might not see, for example, the reciprocal movement of large scales of money, right? Of a single transaction or a single tranche of a large scale of money. Also, what's interesting is sort of we really don't know the scale and size of Hawala just by virtue of the lack of regulation and reporting. But the estimates of remittances by themselves and the study of remittances by themselves illustrate that there's a very high amount of Hawala use, right? If you look at World Bank documentations, they estimate that around 50% of South-South remittances in the 21st century seem to have gone through Hawala networks, which really tells you of the scale, size, and popularity that this mechanism really has. But more than anything, few definitive statistics exist, which is one of the biggest reasons as to why more research into Hawala is required, but more importantly, regulating Hawala so we can understand the scale of the problem and then hence the scale of the economic consequences of the use of Hawala upon the world, right? Nevertheless, we can sort of look through a few highly approximate and highly assumed numbers that come from different sources to sort of grasp and garner a picture of how big Hawala really is, right? For example, in 1998, Interpol estimated that 50% of India's GDP was trading through Hawala at some point, which is around $680 billion, which is an absolutely staggering amount. And sort of later research does show that this number is reduced, but still Hawala remains quite a large part of India's active trade networks and contributes significantly to its GDP. We see very similar cases, for example, in 2002, where approximately $10 billion of the $14 billion that were channeled to India through some specific routes that were studied came through unofficial networks like Hawala or something very akin to Hawala like Hundi. In 2008, so the global value of Hawala remittances were around $100 billion. This is from, I think, a World Bank study. And very similar to India, we also see a large reflection of Hawala in Pakistan, for example, right? In Pakistan, it's estimated that around $2 billion to $5 billion annually is the value of Hawala transactions, and a very large section of the economy operates on Hawala. We also see, for example, in Europe, 90% of migrant transactions rely on Hawala. And recently, there's been an uptick of the use of Hawala by criminal networks, particularly in Eastern Europe, particularly when they trade with the Middle East or with South America, to use these pre-existing Hawala networks for the transactions and for the movement of a very large amount of cash. And what is unique is Hawala is very often used for remittance networks just by virtue of the fact that it's international and does not require documentation. To which, for example, in 2021, we see that just remittances by themselves reached $605 billion from to low and middle income countries from high income countries. And a significant portion of this is estimated to come from Hawala. And as we see sort of globalization cause migration to increase and these networks of labor to get even more dense and to move around even more, we see this amount is most likely to increase, if not at least supplanted or replaced by an alternate form of transaction that could replace Hawala's virtues, which I will talk about briefly towards the end. But then a very obvious question arises, why is it even so popular? Particularly because there's been a lot of discussion in the last couple of years about sort of financial inclusion, opening bank accounts, particularly in the Indian and South Asian context, but also the rise of these telecom networks, phone networks for transmitting money, and Venmo and other internet-based money providers, right? But there's still a few caveats and significant reasons as to why Hawala does persist as a form of money transmission, right? Firstly, cost effectiveness. Quite uniquely, Hawala is very cost effective. So even if you look at the World Bank's estimates of how much it costs to transmit money, even with sort of modern technological advancements, it still costs around 6% of your total money transmitted value on average to transmit globally from one country to the other. And even up to like 9% to transmit money to sub-Saharan Africa. Hawala's costs, on the other hand, range from 2 to 5%. And in some very popular networks, for example, it can even go down to 1 to 2%. Right. Somebody, for example, looked at Western Union and its operations in Karachi. And this study seemingly found that if you want to transport money from New York to Karachi, and let's say you want to transport $200, in the case of Western Union or other similar postal union networks, it'll cost you 22 of these $200 to transmit this amount of money. But the minute you go to Hawala, for example, Hawala does it for a mere average of $10. And even then, very often, if you know the Hawala dial well, this could go down to just a free transaction for a friend or a family member. To which point, the cost effectiveness of Hawala is really difficult to compete with. And this becomes a real issue when you talk about scaling and giving it to more legal or more licit methods of money transaction. Secondly, speed is quite a critical part of Hawala. in that just because there's such few bureaucratic loopholes to jump through and just so little regulation or KYC mechanisms, you can very quickly move money across the world. And the only real cost or real time is to just make a phone call and physically go to the place where the Hawala is. To which point, some Hawaladars can complete transactions in around 2 hours, if not lesser, for particularly short or particularly popular networks or routes. But even in really difficult parts of the world to reach, Hawaladars can maybe get up to 48 hours, with most estimates saying that Hawalas never take more than 2 or 3 days to complete a transaction, which is quite shocking, even in the scale of sort of the global transactions, particularly when you account for the fact that a lot of these customers find themselves in rural parts of the world or parts of the world that are cut off from traditional financial networks, to which point it's highly critical, but also highly life-saving, for example, to have these financial networks that people can access. What's also unique about Hawala is the autocratic approach and the autocratic structure, in that Hawala sort of exists because there's really no global scale of Hawala. There's no large corporates who deal with this, and it's instead sort of localized in these sub-networks. And this by virtue, for example, A, makes it very accessible, but B, also makes it really lean. So the large expenses that global banking networks, for example, have of having physical infrastructure in different countries, meeting global regulations, just do not apply to Hawala networks. But also, more interestingly, because they can sort of bypass bureaucratic quagmires and other red tape that a lot of country needs, particularly, for example, formal identification registration and other networks, what you might very often find is Hawala becomes the banking service for the unbanked, wherein they promote this sort of unique banking inclusivity and allow people, particularly migrants and others, people sending back remittances, to engage in the financial network and legally and sort of semi-legally transmit money across the world without actually having to go through the very difficult networks that governments often rightly so put into place with regards to transmitting money. And there's also a concern that traditional banking networks have with dealing with such money, for example, because it's very uncertain as to the source of the money, but also just because of lack of documentation, they might often not give services, for example, to refugees in some parts of the world. But mostly because the consequences, for example, of dealing with customers who may not have a good KYC clearance can be significant for the banking structure by itself. They could be fined or they could be banned from the country that they're operating in. To which point, even it's often very much not in the bank's best incentive to engage with the traditional customers of something like a Hawala network. To which point, even if customers want to move to traditional banking networks, it very often comes at the cost of the bank just simply refusing to take their money and turning them away. Lastly, Hawala is sort of uniquely culturally familiar to a lot of people. A, going back to the network of trust, and B, going back to the fact that it often goes to intermediaries and people that you know, to which point there's a cultural familiarity that makes it more reliable. There's also been studies that look into sort of its success, and people find that the fact that the nuance of culture and language and even religious considerations that affect Hawala make it unique, in that, for example, some aspects of Islamic law might be critical of traditional formal Western banking networks, to which Hawala, which traditionally would be operating within the norms of this Islamic network, can be an acceptable alternative to Islamic banking. On the other hand, just the linguistic ability for you to communicate easily with your Hawaladar as compared to a bank might make it an easier and more attractive option. So broadly, for these four reasons, cost effectiveness, speed, the autocratic structure, and cultural familiarity, Hawala has persisted as a sort of unique mechanism since the very ancient forms of money till today, even in our modern globalized system, right? Also, where are these sort of Hawala networks broadly used? There's three very common groupings, but then as mentioned in the sort of introduction, the use of Hawala is sort of universalized and can be used for any purpose. There is not a very specific customer base to which it caters, right? Remittances, firstly, so these very big groups that Hawala caters to, particularly because of the diligent efforts of low income migrants, particularly who want to transport money back to their home countries, right? The diaspora very often engaged in Hawala networks, even at scale, particularly even after establishing themselves in a country, just because of it's far more efficient than using traditional banking networks, right? Secondly, humanitarian purposes. What's really unique in that is that, and this has often been used by global NGOs and other organizations functioning in parts of the world without a effective network of finance, is particularly when we have the ravages of war, instability, natural calamity, sort of political crisis, and banking networks often pull out or shut down or are very wary of doing business. Hawaladars seemingly persist and continue to operate at scale. To which point the UN often has to allegedly have used, actually allegedly, these aren't reports, but has actually turned to Hawaladars in Somalia, for example, when they want to transmit large amounts of aid money to people on the ground. And Afghanistan actually has a very high dependence on Hawala networks, to which point it's believed that around 18% of all of Afghanistan's GDP, even today, operates on Hawala, and very often has been used by global NGOs and other financial aid organizations to support and to send money to parts of the world where we just don't have humanitarian networks for finance. And third, which is the most overstudied part of Hawala, which is criminal purposes, right? And just as we discussed, the very inherent attributes of Hawala make it really appealing for any potential criminal or criminal per se, right? We have these trust-based networks with minimum checks. We have really low costs, and we have this sort of global network that ties together any part of the world we can really imagine. And this would make it really appealing to anyone who wants to misuse Hawala for what it is, right? What's unique about Hawala is that if you look at the mechanisms and steps for money laundering by itself, Hawala is able to cater to each of these three steps uniquely, in that it makes it a very appealing method to move money and for money laundering. So Interpol actually has sort of these three steps for money laundering that they've sort of generalized. The first is placement, where illicit funds are first introduced into the financial area. The second is layering, where these are sort of diluted and mixed up with other forms of money to sort of obscure this actual source of the money and the fact that this might be black. And third, integration, where this once illicit fund is now reintroduced into the global economy and can be used legally. What Hawala is able to do is place the money, just give your money to a Hawaladar who might put it into his trade business, for example, to which point placement is very easily successful. Layering, where Hawaladar money could now be invested or bought as gold or jewels in some other part of the world. And this might make this money a lot more legal and easy to use. And lastly, integration, right? Where once this Hawaladar money, for example, is reached you as cash in a third world country, you can go to your local bank and just say, my son sent me some money from this country, or my daughter has sent me some money from work. You might put it into your bank account and you might actually have it legally enter the financial system. To which point, even for small scale, but even for large scale criminal activities, money and particularly money laundering, Hawala becomes a really effective way to align these three stages and sort of makes it very appealing to people who want to evade taxes, not want to actually come under the government surveillance, and want to launder money across global networks, right? Another very unique trait is because you leave a minimum paper trail, terrorist financing very often turns to Hawala. To which point, particularly in the post 9/11 world, a lot of studies were done on Al-Qaeda and Taliban funding networks, and they found sort of Hawaladars who would very often just have regular customers in these countries, also on the side catering to people who are active in terrorist financing. The reason for this could be twofold. Either it could be ideological motivations, in that the actors are well aware that they're terrorist financing and participating in it. But secondly, as mentioned, it might be an affront to ask for documentation, and more interestingly, because these trust-based networks, they just do business with everybody who they sort of trust and rely on, to which point it might be very difficult to even identify for a Hawaladar what money is actually going where and what purposes it's being used for, which is certainly not the case for banking networks, where there's often a reasoning given for large-scale transactions and large-scale movements of money. But the issue with looking at Hawala from a criminal purposes only is there's not been a lot of nuance and care given to analyzing this specific purpose of Hawala, in that it's often generalized as purely a criminal act that is done purely for illicit activities. But however, when studies do actually look at the scale of Hawala, we find that some Hawala networks might cater to illicit activities. The overwhelming majority of these remain legitimate. In that case, for example, it's very important to consider the scale of Hawala that's used for illicit activities, and any solution to Hawala must consider both the criminal purposes, but at the same time, the very critical and cutting edge and cuttingly important humanitarian purpose and remittance purposes that Hawala caters to. What's also important to look at is there has been some study on post 9/11 Hawala funding, and there's actually been finding that of terrorist activities and criminal actors have seemingly started using the more traditional financial methods anyway for transferring money from one country to the other. To which point it could be argued that these active use of networks by criminal actors is sort of universalized in the financial network, and Hawala is not really unique in that it is just a cog in a broader wheel. Nevertheless, it's very critical to regulate and understand what Hawala is, to which point regulating Hawala becomes quite the challenge. This is sort of, as mentioned, there's just these very unique advantages to why it helps people. It layers, all three layers of money laundering. There's anonymity, and the narrative around Hawala has been marred with sort of vilification, trying to inextricably link Hawala with illicit activities, which, while it is, as I mentioned, used for, not solely the purpose. And this misunderstanding lies at the core of all regulatory decisions taken with Hawala. This is, for example, a quote by Passos, who's sort of one of the world's leading experts on illicit money trade and sort of informal value movement and transfer systems. And he basically argues that IVTS do not represent a money laundering or crime threat in ways different from conventional banking. While criminal entrepreneurs do make use of IVTS, it appears that the amounts involved represent a rather small part of dirty money in circulation. But then the final and more critical question is, how do we regulate Hawala? How do we tame this untamed beast that seemingly has persisted for the last 1,000 years since the beginning of money and the beginning of currency, right? I think it's very important to sort of highlight what the imperative is and why we even should care and need to regulate Hawala. Just beside the scale by itself, what are the effective reasons, right? And there's sort of two broad reasons I would argue that motivate this. Firstly, economic necessity, and secondly, deterring illicit activities. Right? The lack of transparency is sort of inherent to Hawala, as we discussed, and this makes it really hard for financial auditors and law enforcement to identify Hawala networks, but also scale them. This really makes it hard for the act of taxation and the act of auditing. And particularly in developing countries, we know the sort of fiscal implications of not having an effective understanding of the tax structure or having cash flow for government networks, to which point there's direct impact upon government services and upon the government's ability to actually provide these countries, provide clients in these countries with the very critical public services that they require. This also extends to sort of the formal financial network, where just large-scale banks have more competition, they're less motivated to enter the market, which actually could affect fiscal and financial flows into the country from, let's say, the West or through the form of investment. And this broadly has a significant effect on the formal financial network. Third, and on a more theoretical network, this also really affects the sort of market efficiency hypothesis and this broad monetary effects, because it's very hard for governments to not predict how much money is going in and out of the country. And this really makes it hard to design monetary policies, particularly because a understanding of the broader remittance networks, but also just global trade, become really diluted when we consider Hawala as being such a large actor that we just don't have numbers or statistics for. And the second imperative is broadly deterring illicit activities, wherein just the secrecy of Hawala makes it really hard to regulate it, but it also becomes an active mechanism of money laundering. And obviously, illicit activities are bad and hence must be minimized. To which point, inadequate regulation is critical. But then, on one hand, inadequate regulation can be perceived as a tacit endorsement, wherein people might just consider governments being willing to engage in these activities, and they might believe it's a free pass to indulge in any illicit activities because of the lack of government oversight, stringent penalties, and just the lack of regulation that exists. On the other hand, ill-conceived regulations, particularly a very heavy-handed approach, could cause an already underground network to go even more underground. Bookkeeping might go from cryptic books to no books at all. Phone calls might become sort of working on third-party apps that just don't have any sort of government regulation or communication. And this actually might not only diminish the transparency of Hawala networks, but might make it even more costly for a lot of the legal users who end up using Hawala to transfer money, for example, remittances across the world. And this might actually even lead to an alienation of a very large set of customers who might be using Hawala on a regular basis. Also, Hawaladars sort of might react to this in a negative way. There's a very unique example in 2018 where we looked at the Afghan Central Bank and their reaction to Hawala. As mentioned, around 20% of the Afghan economy at this point was believed to have been flowing through Hawala networks just because of lack of traditional and formal banking systems. The government actually, on a mandate to collect comprehensive customer documentation and on a mandate to sort of improve their taxation in 2018, decided to actually regulate Hawala. And they basically said that all Hawaladars must be these restricted traders who signed up by the government. They got themselves identified, and every customer must have some form of identification imposed upon them, which from a regulatory perspective is a very fair request to ask for actors, particularly when money could be misused for any purposes. However, what this sparked was a massive backlash from Hawaladars who knew that they would lose a lot of business and just would not want to engage with these mechanisms that the government had put on them. So there's actually a strike by Hawaladars, and the strike went on for a couple of weeks, which had a significant effect on the economy broadly, and actually caused the government to actually double down and said to actually fold and basically let Hawaladars operate freely post this event. So that it could actually lead to significant financial effects if Hawaladars, although they don't really have a union or group of people voicing their opinions in government, they might actually react to a lot of these policies, which is extremely critical, particularly in precarious settings when Hawaladars tend to be the only lifeline for money transport in this global connected world. So what's critical to realize here is an unregulated Hawala is a double-edged sword. On one hand, it facilitates legitimate remittances, but on the other hand, it masks illicit financial flows and tends to foster sort of tax evasion and other critical mechanisms. So what are the caveats here? Before we come for any regulation, we must sort of keep a few things in mind, particularly as a check mark to see if our proposed policies and proposed regulations actually meet these requirements, right? I think it's very critical to realize that Hawala is a deeply entrenched socio-political norm, and any attempt to regulate it must recognize that it's got a high social relevance, but also its customer base is not just sort of criminal traders who want to make a quick buck. Secondly, by disproportionately spotlighting Hawala's association with illicit activities, regulators could sideline the prominent use of legal non-criminal endeavors. Third, while criminal funds do flow through Hawaladars, they might equally traverse through other conventional financial mechanisms. Hawala is but a cog in the wheel and of the wheel itself. When it comes to criminal undertakings, Hawala should be considered a conduit and a consequence of a primarily illicit act and not the illicit act by itself, unless proven otherwise. And lastly, over-regulation, as I mentioned, risks alienating economically vulnerable actors, but also impedes essential humanitarian workers, particularly within settings where Hawala seems to be the only lifeline or mechanism. The second caveat here is the moral and cultural imperatives. There's a very interesting moral question of consent, to which point that questions of the government's role in regulating banking networks, but also two individuals' consent of just transferring money from one part of the world to the other if they have made this money through legal means and not through hurting anybody. And that is fairly an important question to ask, and the way that question of consent does trickle down into our daily interactions with banking networks. But secondly, it's important to recognize that the moral legitimacy of Hawala isn't derivative of sort of Western perspectives, but arises from intrinsic goals, operational methods, and contextual circumstances, and the eventual outcomes of transactions. And sort of just putting a very Western or Eurocentric vision of what effective and fair banking really is, and measures of secrecy and opacity, for example, upon a pre-existing sociocultural network might be problematic in that it might be A, myopic, but B, it might face backlash from groups that believe that their culture is being impeded with, or more importantly, their lifelines to their families, for example, are just being cut off. And third, it's critical to also realize that there's sort of enforcement and practical challenges where the unique modality of Hawala stymies most conventional monitoring networks. So if we have to actually monitor Hawala, we have to be really creative, but also understand its very networks. And lastly, due diligence and suspicious activity reporting, because of the whole anonymity and trust networks, just make it really hard to do. Also, it's important to understand that we should actually comprehend and regulate methods to which Hawala operate and not just regulate them with a heavy-handed approach, as at least in the US context has seemed to be the case. Briefly, what are some quick lessons from India? Although in the paper I do talk about this extensively, I just think it's important to quickly highlight the fact that India has gone from having a sort of loose and lax approach to Hawala to a heavy-handed one. And frankly, we really don't know the effects of these, but it seems to have been two different perspectives on what I call the investigative and the public policy approach to regulating Hawala. Today, despite being effectively outlawed, Hawala still persists in India. And going back to sort of the Interpol reporting, a staggering up, I think it was 40%. Sorry, 40% of the country's GDP had at some point in the 2000s passed through the Hawala network. In the 1970s, actually, the Indian government took quite a heavy-handed approach, but seemed to actually ignore Hawala and actually go after the other more traditional, the other more easy to identify forms of money laundering. In the 1990s, this came with the economic liberalization and the development bond scheme, which basically gave immunity to any actors who want to bring in foreign funds into Hawala. And what this basically allowed Hawaladars to do is very quickly settle the debts that had built up over years and just sort of start with a clean slate all over again. And that was at the time highly criticized, but in retrospect was one of these sort of side effects of a very liberal economy the government was trying to promote. At this point, there is some no questions asked policy about residents' foreign exchange holdings, which has since changed. In 2003, for example, what they did was introduce this Prevention of Money Laundering Act, which mandated Hawala record keeping and introduced a suspicious transaction reporting scheme, which is in line with sort of the global norms and regulation at the time. And the 2000s also formed these two acts, FERA and FEMA, which actually explicitly prohibit Hawala-type transactions. So what we see is sort of a series of policies that are actually meant to liberalize the economy, that actually made it even more easy to actually engage in Hawala and actually just allowed Hawaladars to, more importantly, go free. But later on, what we see is a heavy-handed approach that once Hawaladars' debts had been settled, they would now be facing strict, stringent regulations and government oppression. However, what's also important to realize is, particularly in the developing world, where corruption seems to be fairly common, we do see a nexus of political actors, policymakers, and people dealing the money, when a lot of political money does seem to be funneled through Hawala networks, to which one becomes a very political minefield. In the Indian context, the famous scandal from 1991 called the Hawala scandal, where they sort of the government raided this very prominent Hawaladar who had very large customers. And when they actually looked at his books, they found out that it was a very large number of local political actors and big names in Indian politics who were involved in these Hawala networks. So there's very often a political imperative as well to why we should be going after Hawala, and at the same time, the regulatory concern of even if we do adopt global policies regarding Hawala, will they be implemented by actors who very much and very often do engage and use these networks for their own selfish needs? Right. So what are the sort of two broad models for regulating Hawala? There's the investigative approach and the public policy approach, right? The investigative approach very much looks and specifically targets the criminal activities instead of merely controlling the Hawala channels themselves. Now, this seems to be what a lot of the few countries in the world that have Hawala regulations have gone after and have adopted this investigative approach. We see models of this in the UK, in the US, and modern India. Afghanistan did try, but failed to implement something like this as well. When we look at sort of anti-money laundering and controlling terror financing mechanisms, we have access to the USA Patriot Act and the Bank Secrecy Act, which basically just outlawed Hawala and said that informal systems must register as money transmitting businesses, and it criminalizes the conscious transfer of funds derived from or intended for crimes. But then the big question becomes, particularly within the Hawala network, how do we identify what money is actually going in and going out for crimes, but B, which Hawaladars actually regulate themselves, register themselves, and engage with the government? Because that would actually take away from one of the fundamental sort of platonic mechanisms or forms that give a Hawala its very shape, right? Secondly, there has been, however, in the American and the UK context, a lot of Hawaladars who've been convicted, particularly for their role in money laundering, for their role in assisting with drug trafficking and terror financing. However, it's important to note that these are extremely prominent cases, and at the same time, cases that are linked to very large attacks or large gangs, to which point, particularly with small-scale criminal activities, these policies often go ineffective and these crimes often go unnoticed. Another very interesting mechanism that these money transmitting business legalities do is they have a system where you must register yourself and then partake in traditional KYC policies. In the USA, for example, by last count, I think it was 2008, there were 40,000 regulated money transfer businesses, which is basically formalized versions of Hawala that had to go through KYC and these other forms. But then again, because of these other regulations, they became a lot more expensive to use, and we're unsure as to how much of the money was, how much business was lost in this transmission from illegal or from unregulated to regulated mechanisms, right? There's another very broad question of the loopholes that already exist within the system, to which point any regulation does have loopholes, and it might be very much the case that any investigative policy could be evaded, but that should not be a reason to not regulate. It's also interesting to note that another policy or proposal does believe in targeting key nodes and pressurizing the choke points of Hawala, which often becomes the banking networks. These are sort of live on the assumption that at some point, Hawala money does go to the bank and is converted to cash for everyday use. And if we, for example, make banks really stringent with their regulations and from the source of the money, they might actually call it Hawaladars. But this tends to have been ineffective. For example, it's very difficult to identify sources of money, particularly even for drug trafficking or transporting. And even in many countries where we do have these regulations in place, there's very little evidence that these actual regulations have culminated in A, government reports, and B, in any form of conviction. To which point, while it might be a very important policy to introduce, the effectiveness is very much up to question. And a lot of the mechanisms, for example, look at the frequency of financial flows and identify large amounts that might seem unusual or sources that might seem unusual. But for example, for a customer whose family is based in, let's say, Afghanistan or Somalia, everyday transactions for these countries might be common, to which point one uncommon transaction could be difficult to identify. And secondly, because the amount of money that is traded in these dynamics seems to be regularly low, one large transaction might not stand out, to which point our traditional methods of financial regulation might just not be effective. There's also outcasting, where some countries that do allow Hawala to exist and allow Hawala to operate leniently could be outcasted within sort of modern statutory and regulatory, as per modern statutory and regulatory standards. However, there's always outliers. We see this very much in the debate of global taxation, with the existence of a few countries that just have no tax rate for foreign customers, wherein even if we have a globalized regulatory approach to this, there will always be a few outliers who just have it better off with the existence of this mechanism, although countries might disagree. Broadly, what are the limitations to this, right? I think firstly, just by the fact that the US does still have Hawala who are still very often convicted, the system does have a lot of loopholes. And secondly, while there's many different countries that have adopted these policies after the US's recommendation, very few actually report any convictions at all. Secondly, there's a lot of circumvention. An interesting approach to this is non-profit organizations, particularly in the developing world, where the regulations seem to be a lot less stringent, to which point Hawala tend to rebrand themselves as non-profits, and it's far more difficult to regulate them. Third, although a lot of Hawala have now registered and become sort of these transaction operators, they are expected to actually file suspicious activity reports, but then the act on their part tends to be reduced just because trust networks, why put in the effort, what's the benefit, and so on. Some argue that actually the Hawala networks operate on their own intrinsic self-regulation because they don't want to be involved in criminal activities, but that is very much up to question. To which point, what I think is the most important reasons to why this policy by itself doesn't work is because while it may deter illicit activities, it does not diminish the very attractive economic attractiveness of Hawala. So even if you regulate it by this form or criminalize the actors who use it, it's still highly economically and logistically effective, to which point you actually don't reduce the number of customers that use it, right? And also more interestingly, particularly in countries where Hawala is the main pipeline of money going into them, you might hamper economic development, poverty reduction initiatives, which is immoral bad and must be reduced. And lastly, there's obviously inevitable outliers in global regulation. What I think is the more effective approach is a public policy approach, which basically argues that we must view Hawala as an economic phenomenon that is influenced by demand and supply. And a solution to Hawala actually involves altering the broad economic landscape and actually reducing its appeal or replacing its appeal with something that is even more appealing, right? What this might look like is a revamped financial architecture that can lower transaction costs and elevate transparency. This offers a swift, affordable, and reliable services in developing countries. This would also involve boosting confidence in conventional banking networks, adopting standard KYC procedures, and such. What this might also look like is liberalizing economies to adopt policies like lower taxation for remittances, floating currency rates, and relaxed currency regulations, and actually low interest rates, which could counter conditions that sustain Hawala to make it more economically viable and more appealing for actors, banks, or for that matter, even individual remitters to send money back to their home countries through legal challenges. And what seems to be the real argument in the favor of this is sort of postal money, Western Union, and mobile money transactions. In the Indian case, for example, there were experiments with this sort of international money transfer system with the Indian Post Service, where you could send money to around 195 countries. And in 2011, in 2011 alone, this network actually moved $6.5 billion to 7,000 postal locations in India. So there's definitely postal money and Western Union, which offer a very attractive system. There's also mobile money platforms that, like Remitly, M-Pesa, the Kenyan experiment with money transfer is one such example, but even the up and coming Indian experiment with UPI seems to be another very interesting case where we have an efficient and fairly reliable and trustworthy network that people often use to transfer money across the world. What is striking in this mechanism is the affordability. The World Bank estimates that the cost of sending $200 across the world through mobile money is just 1.7% on average, compared to 11% for traditional banking networks, and as mentioned previously, around 5 to 6% for Hawala. Because mobile banking is so cheap, it becomes a very effective competitor for Hawala and actually could replace what Hawala has. However, because of sort of very stringent regulation in countries, mobile money does actually have a few hurdles. It's not very easy to scale up as of right now. And complying with banking regulations, even for mobile actors, tends to be difficult because of civil liabilities, regulatory measures, background checks, and such. And they still do not meet the cultural and moral imperatives as discussed previously, particularly within the mindset of individuals who simply don't trust banks or phones well enough. And this would involve actually promoting trust through financial inclusion, government communication, having strong regulations, and more importantly, just making mobile transfer and postal transfer a very viable alternative to these networks. What is to note here, however, is this does require documentation to some extent, and the fact that you must be able to afford a mobile phone or network of the sort. There's certainly a bar that comes in financially that you don't have in the Hawala case. But more importantly, because they need a documentation, you both reduce the number of criminal actors using these forms, although you obviously don't eradicate them entirely. At the same time, you are able to get people more into the formalized realm by enforcing in some way the act of getting a documentation, which we see, for example, or identification, which we see, for example, in the large push in countries like Rwanda for documentation, but also in India, where Aadhaar has been pushed upon pretty much the entire population at this point. What are the limitations of this approach? There's obviously risks with privatization and economic liberalization, particularly in countries where there's fears of monopolization, actors taking over industries. In the Kenyan example, for example, the lack of regulation with a lot of money transfer networks have caused 2 or 3 big private companies to compete on alternate modes and alternate networks of economic inclusion for people, which you could argue is certainly highly ineffective in a developing country. Economic liberalization comes with its own risks, which has been debated heavily through many years of economic debate. There's also the case of complying with banking regulations, which might open banks to civil liability. So the motivation to enter these markets is just lower. Regulatory measures also make it more expensive. And lastly, these still do not address customers' needs for anonymity or efficiency and reliability. There have been some proposals to use networks like Bitcoin that maintain anonymity. However, given their very active use by illicit actors and lack of regulation, it seems like replacing one pretty effective mechanism for illicit money transfer with another, and these might not seem to be the best option. But nevertheless, money transfer and sort of the public policy approach by making the economy just more attractive to people, and the formal financial flow just more attractive to people seems to be the best option. Overall, what I would argue is a two-pronged approach that seems to be the best case, where you're able to both act and very actively criminalize actors who are using any mechanism financially for criminal activities. At the same time, you're able to give alternatives that are legal, formal, documented, fast, cheap to people. And while this may sound like a utopia in the sort of modern technological revolutions and the push by governments, this might very easily become a network that people might use. The goal should be to foster a sense of supervision without pushing Hawaladars so far so as they feel compelled to retreat into the shadows. And what is particularly optimistic about this mechanism is the cyclical compounding of the effects of reduced money flows. Because as mentioned, the network of Hawala operates by reducing debt over time, to which point, if a few countries are able to effectively reduce the amount of money going into the Hawala networks to begin with, the amount of money that Hawalas can send and transmit reduces. And over time, you would hope that this has a cyclical effect upon the sheer amount of money in the system, that eventually it all goes into the financial system, which does give hope for any strategies that actually want to regulate and want to reduce the pathways to which point to Hawala. That's pretty much all I have. If you have any questions, I'd be happy to answer them. Thank you very much.
And thank you, Bilal. That was a great overview of your excellent paper looking at the history of Hawala, the ubiquity of it, how long it's been used, social questions related to it, social issues related to it, as well as some very good ideas on how it might be possible to reduce the use of Hawalas as a way to address illicit flows, terrorist financing, and other things.